The world's financial foundation just suffered a catastrophic rupture while you were sleeping. Greetings, I am your host for Commodityadvisor. You recognize me as the narrator who provides your early morning economic briefings. I'm wearing a massive grin today because what you are about to find out is staggering. It is Monday, January 26th, and the pipes of the global monetary system have basically exploded. While the United States was resting, gold values climbed to $5,085 and silver soared to $17.54 in late night sessions. The period of triple-figure silver is no longer a prediction. It has arrived. But do not be distracted by the digits flashing on your monitor. This is far more than a typical market move. What is unfolding in the Eastern markets is a complete separation of physical reality from paper figures. As the current administration's trade warnings spark a worldwide rush to exit the dollar, the gap between digital contracts and actual bullion has turned into a massive abyss. A Justice Department investigation into Jerome Powell has effectively frozen the central bank S-power to steady our currency, leaving the primary exchanges totally vulnerable. As the opening signals chime in Manhattan, countless short sellers are staring at margin demands that are fundamentally impossible to fulfill. Available stockpiles have hit rock bottom. For the first time ever, the primary concern is not the market value. It is about who actually possesses the physical bricks. Today, we are moving past the technical graphs. We are examining actual shipment logs. Let me give you some context on this situation. For half a century, the valuation of gold was decided in cities like New York and London. Our Western hubs dictated the price that everyone else on the planet followed. That mechanism completely shattered at 6 minutes past 10 this morning. Trading floors in Shanghai and Hong Kong drove gold beyond the $5,000 mark and never looked back while our domestic brokers were home and our markets were shut down. These are not typical fluctuations. These are the types of spikes that indicate a permanent transformation in the global monetary framework. Pay close attention to why this timing is so critical. The president released a massive update on Saturday that many citizens missed during their weekend downtime. He warned our northern neighbor of 100% trade penalties if their leader, Mark Carney, completes a commerce agreement with the East. This is not some small argument over lumber imports. We are talking about 49,000 Chinese electric vehicles entering Canada in exchange for better terms on agricultural exports to Beijing. Consider the consequences for our domestic economy. Canada stands as our primary trade collaborator. We share an integrated infrastructure, energy grids, and thousands of miles of border that sustain our industrial output. Now picture that bond breaking because their leadership is making side arrangements with the exact nation we are attempting to isolate. You're witnessing a massive trade conflict erupt between the primary partners of North America, and precious metals reacted before the news cycles could even process it. Eastern hubs moved first because they were active when the announcement hit. But here is the deeper truth that overrides everything you thought you understood about how metal is priced. For decades, whenever bullion rose too quickly, our domestic hubs had a standard tactic. They would issue more digital contracts, hike margin costs, and coordinate selling among major institutions to simulate a decline. The physical reality would eventually bow to the paper price because the West held the power of perception. That system just collapsed in spectacular fashion. Eastern investors demanded the actual metal, not just digital IOUs. When paper fails, the world returns to the safety of physical gold. Spot prices in Shanghai drifted away from domestic futures by the largest gap since the late 19th century. When Eastern buyers pushed gold to $5,085, they were not just swapping digital files. They were claiming actual bars for their own vaults. You might wonder how this impacts your personal savings or your family's long-term wealth. Let me explain the connection. When the power of pricing shifts from the West to the East, it means the digital manipulation machine that kept prices low for your whole life is failing. Every time an expert claimed gold was too expensive, they were looking at manipulated figures. Physical bullion does not operate that way. You cannot simply manifest more bars in the East, like you can print digital contracts in Manhattan. The market's driving this spike deal in tangible settlement. When they decided on that $5,000 valuation, they proved it by paying full cash and taking ownership. In 20 minutes, the domestic exchange opens and faces a moment that will dictate the next decade of finance. Our hubs can either accept this new price floor, admitting that the East now leads, or they can try an emergency intervention. But there's a major hurdle. The old strategy is useless now. The central bank cannot hike rates to save the dollar because the chairman is distracted by legal subpoenas. He is stuck, unable to move without appearing to submit to political force. Bullion is soaring because the traditional suppression tools have been disabled. The silver move to 1754 proves this is a broad crisis. When major industrial players in the East are also grabbing hard assets, you know the insiders see what is coming. Last month saw over 100 tons of physical metal claims, a massive spike compared to historical norms. When a major bank like Wells Fargo settled for nearly $200 million in actual metal, they signaled that the biggest players want possession, not promises. In a few moments, we will see if Western control still has any life left. If the price holds above 5,000, you are watching a historic shift. If it drops, they might have managed one last manipulation. But the real issue is how much longer they can do that while the vaults are being emptied. This breakout was not an accident. It was the world voting on a future where the dollar is no longer the undisputed king. You need to grasp the events of January 10th that destroyed dollar trust. The Justice Department hit Jerome Powell with legal orders regarding renovation expenses at the Federal Reserve. Think about that. The executive branch has effectively targeted the leader of the one agency that is supposed to be neutral. Powell described it as a move to force lower interest rates. The administration wants cheap money before the next voting cycle. But Powell is trapped. If he lowers rates, he looks compromised. If he keeps them steady, he faces legal threats. If he raises them to save the dollar, he looks like a saboteur. So he did nothing. The world noticed this paralysis instantly. Gold rose nearly 18% in just 30 days. That is not a trend. It is a flight to safety. When America treats its own banker like a criminal, the entire planet reevaluates their holdings. For 50 years, the dollar worked because the Fed was seen as independent. That belief is now gone. Every foreign nation holding our currency is now asking, if the Fed chair can be targeted for a construction bill, what is our money actually worth? This is why the East is buying gold at triple the previous rate. They are not chasing a chart, they are escaping a collapsing system. Look at the data. China, India, Turkey, and Poland are all hoarding metal at record levels. These are sovereign states protecting themselves from a dollar that is becoming a political weapon. When we threaten to jail our own banker, every finance minister on the planet starts looking for an exit. The 1971 deal is over. The promise of sound policy is dead. If you were the leader of Singapore or Poland, what would you do? You would quietly move your reserves into something that cannot be frozen or canceled. That is exactly what we are seeing. It is a slow, steady exit that accelerated the moment those subpoenas were served. Mark Carney called this a rupture. He was right. It is not a smooth change. It is a violent break. Middle nations are now joining together to create financial paths that do not involve our control. The threat against Canada over Chinese vehicles is a perfect example. We are trying to force compliance, but we are only proving why everyone needs an alternative. Canada is not going to just quit. They are going to speed up their trade in other currencies because we proved the dollar is a risk. Gold rose on that news because it showed how desperate the West has become. Every time we use the dollar as a stick, we lose a little more of its power. Central banks are dumping treasuries at a rate that should terrify you. This leads to higher rates for your home and your car because we have to pay more to get people to lend us money. Why would they lend to us when our leadership is in a civil war with our bankers? A currency without trust is just paper waiting for a fire. We are in a loop that cannot be stopped. Political fighting makes the dollar weak, which makes gold strong, which makes the dollar even weaker. This is why $5,000 is not expensive. It is a reflection of the dollar's loss of value. The smart money moved weeks ago. They are not betting on a price. They are buying insurance against a system failure. The math at the exchange is terrifying. There's not enough metal to cover the digital claims. If even a small fraction of people ask for their bars, the system defaults. This is what the East priced in while we were asleep. They saw the subpoenas, the trade threats, and the empty vaults, and they made their move. The gap between physical coins and digital contracts is already showing the truth. You are paying a massive premium for real metal because people who have it do not want to let it go. In 10 minutes, the bell rings. The short sellers are about to get hit with billions in margin calls. Some will survive, but many will be forced to buy back, setting prices even higher. Some might even try to find metal that does not exist. The Friday meeting is the final deadline. No matter what Powell chooses, bullion wins. If he cuts, the dollar dies. If he stays quiet, the crisis continues. If he raises, the market crashes. He is in a cage. This is why you should be watching the first half hour of trading very closely. If the price sticks, the old world is officially gone. If they smash it, it is just a temporary delay before the final break. Commodityadvisor subscribers know that having the metal in your hand is the only way to be sure. The BRICS meeting later this year is the final nail. They are building a system that bypasses us entirely. If they launch a gold-backed settlement, the demand for physical metal will go vertical. We are talking about thousands of tons needed for trade. That metal has to come from somewhere. The rupture is here. It is not about a chart anymore. It is about the end of an era. The bell is about to ring. Stay tuned because the next 30 minutes will change your financial life forever. If you found this update valuable, please like this video and join our community here at Commodity Advisor. What is your plan if the exchange fails to deliver physical metal today? Leave a comment below. The opening signal is almost here. Everything is about to be revealed. We are entering a phase where the only thing that matters is what you can touch. The digital illusions are fading. The East has made its choice. Now the West has to figure out how to respond to a world that no longer fears the dollar. The margin calls are going out right now. The vaults are being checked. The era of cheap insurance is over. Watch the tape. We will be back with a full report after the first hour of trade to see who survived the open. This is Commodity Advisor. I'm signing off for now. Keep your eyes on the gold. I want to dive deeper into the historical context, because understanding how we reached this cliff is vital for your preservation. For 5 decades, the petrodollar system allowed the United States to export inflation while importing real goods. We printed currency, and the world sent us cars, electronics, and energy. That arrangement was predicated on a specific kind of global trust that has now been systematically dismantled. When the Justice Department targeted Jerome Powell over mundane construction costs, it was not just a domestic political move. It was a loud signal to every foreign creditor that the internal checks and balances of the American financial system are currently being overridden by executive whim. This makes the holding of U.S. Treasury bonds an act of extreme risk rather than a safe haven. If you are a central banker in a middle power nation, you are watching this and realizing that your dollar-denominated assets could be weaponized or devalued at any moment. You are looking at the massive debt loads and the political paralysis, and concluding that the only safe exit is through the narrow door of physical gold. The volume of buying we are seeing out of Asia is unlike anything recorded since the end of the Second World War. It is not just the sheer tonnage, it is the intent. They are not trading these bars. They are storing them as the base layer of a new economic reality. When we talk about gold at $5,000, we are actually talking about the dollar losing 90% of its relative value against hard assets in a historical blink. This is the definition of a currency crisis. It starts slowly in the quiet corners of the overnight markets, and then it accelerates until it is all anyone can talk about. By the time the mainstream media begins reporting on $5,000 gold, the opportunity to position yourself at lower levels has already passed. The decoupling we witnessed today between the COMEX paper price and the Shanghai physical price is the final warning. It tells us that the paper markets are no longer in control of the underlying reality. If you are holding digital gold or silver contracts, you must ask yourself if you truly believe those contracts will be honored with physical delivery when the vaults are empty. History shows that when these exchanges are pushed to the brink, they change the rules. They enforce cash settlements, which means you get your devalued dollars back instead of the metal that actually has value. This is why having physical possession is the only true hedge against a systemic failure of this magnitude. We are watching the end of the Western financial monopoly in real time. The decisions made in the next 30 minutes on the trading floor will reverberate through your bank account for years to come. Do not be caught off guard by a system that is designed to protect itself at your expense. Keep your focus on the physical reality of the markets and ignore the paper noise that has misled so many for so long.